You know, the people who run the financial system haven't stopped collecting it. They've just stopped talking about it. Right now, entire nations are stockpiling gold. Wealthy families are moving gold offshore and hiding it behind shell companies. And central banks, the same ones that print your money, are buying more gold than they have in the last 50 years. Why? Well, because they know something the rest of the world hasn't figured out yet. Because if you want to understand how power moves, you follow the gold. It's not just sitting in central bank vaults or treasure chests. No, in this video we're going to show you exactly who owns the world's gold, where it's kept, and why this matters more than ever. Welcome to Alux. All right, so first up, mining companies, right? You'd think that the companies that mine gold would be the ones hoarding it, that they'd be sitting on vaults stacked to the ceiling with bricks of bullion. But mining companies own the least gold, just 2% of the world's share. If you stacked all the gold they have next to the Eiffel Tower, it would only reach about halfway. The people pulling gold out of the earth are not the ones keeping it. Instead, they sell it to fund operations, pay shareholders, or reduce their risk. Just 5 companies dominate the world's gold mining industry: Newmont Corporation, Barrick Gold, Anglo Gold Ashanti, Polyus, and Gold Fields. And most of the gold they mine comes from a handful of countries: Australia, Russia, South Africa, Indonesia, and Canada. Just look at the huge difference between the top 2 countries, Australia and Russia, and everyone else. These companies mine the gold, and then as fast as they can, they sell it into the global market to refiners, banks, and governments. They have to, because building a gold mine is not cheap. It can cost more than $1 billion just to bring a single mine online, and that's before you pull an ounce of gold out of the ground. On top of that, it takes 10 to 15 years from exploration to production. By the time the gold hits the market, the price could have moved dramatically. Because gold prices swing like crazy, many miners hedge their production. They sell future gold at today's prices to protect themselves from downturns. The upside is they get a predictable cash flow. The downside is that if gold prices skyrocket, well, they've missed out on the profit. They're not playing the long game, they're just trying to stay in business. If you're surprised by how little gold the mining industry has, this next one is really gonna shock you. Because we're talking gold exchange traded funds. So we've seen that the companies that mine gold are at the bottom of the ownership chain. They dig it up, sell it off, and move on. But where does some of that gold go next? Well, it enters the financial system, and one of the stops along the way is ETFs and investment funds. Now, at first glance, it seems simple, right? Buy a share of a gold ETF and you own gold. Funds like SPDR Gold Shares and iShares Gold Trust allow millions of investors to dip into gold without needing vaults, guards, or transport. You click Buy, and you get a digital slip that says you own a portion of gold somewhere. It's still gold, but it's abstracted because now it's a financial product, not a physical asset in your hand. Individually, an investor might hold the equivalent of 1 gold coin. But collectively, these ETFs have amassed around 3,500 metric tons of physical gold. That's more than the reserves of countries like Switzerland, Japan, and India. And this might sound like a lot, and it's certainly worth a lot, but if we used our Eiffel Tower example once again and stacked that gold next to it, it would only reach about a third of the way. Now, even though you'd only get a receipt when you buy shares, this gold isn't just theoretical. It's sitting in highly secured vaults in cities like London and New York, managed by institutions you've probably never heard of, but that hold more gold than your central bank. And when you buy an ETF, you don't own gold. You own a share in a fund that owns the gold, and that fund uses a custodian, usually a major bank, to hold it. That means if something happens, a geopolitical shock, a legal freeze, or institutional collapse, you don't have claim to a specific bar of gold. You've got a piece of paper that says you own exposure to it. It's secure until it isn't. People still pour billions into gold ETFs every year because it's a shock absorber for financial panic. When inflation spikes or when stocks nosedive, gold ETFs become the go-to hedge. But the thing is, a hedge only works if you already have something to protect. If you're still building that foundation, you don't need to wait for stability. You need to create momentum. Now, we see far too many people standing still when they should be moving, okay? And that's exactly why we created the Alux 30-Day Business Challenge. Inside the Alux app, you'll get access to expert-led collections that walk you through the key steps of launching something real, okay? Terry Rice, he shows you how to validate your business idea and turn it into something people actually want. Claudia Miklaus helps you to build a personal brand that attracts high-value clients, not just attention. And Michael E. Gerber teaches you how to create the systems that allow your business to scale without burning out. It is focused, practical, and designed to move you forward fast, okay? Right now, you can unlock the entire challenge with Alux Premium for just $19 a month. That's 35% off. If you've been waiting for the right moment to start, well, this is it, my friend, because you first have to build something worth protecting. Otherwise, you'll be playing in the broke league forever. So here's how you do it, okay? Go to your app store and search for the Alux app. Download it, scan this QR code on screen, and that'll give you the discount. It's only for the month of April, though, so make sure you move fast. As you're building your empire, you'll learn how and why institutions use these strategies they do, like when hedge funds, pension funds, and sovereign wealth funds use ETFs as financial tools. How they can enter or exit multi-million-dollar gold positions in seconds without even moving a physical bar. Something that makes these funds incredibly influential, not just in how much gold they own, but how fast they can move markets. They don't need to hoard gold to control it, they just need to move faster than everybody else. So while ETFs and gold funds only hold a small slice of the total supply, just around 2%, their influence on price, perception, and panic is disproportionately massive. Now, before we move on to gold guarded by governments, we have to stop where gold hides in plain sight, not to be preserved, but to be used, even if that means it's gone for good. So this one's all about the industrial world. Your phone has about $1 to $2 worth of gold inside of it. It's not much, but when you scale that across billions of devices, you get tons of gold sitting inside people's pockets. It moves up the Eiffel Tower scale. If stacked up, the industrial world gold would be the equivalent of 3 towers high. Most of it will never be recycled because extracting it costs more than it's worth. While most people think of gold as a symbol of wealth, it's also one of the most important industrial metals on the planet. We can't have it just sitting in vaults. We need it in machines, wires, satellites, and circuits. Around 12% of the world's gold is used in industry, and unlike bullion or jewelry, this gold doesn't circulate. It gets melted and fragmented into chips and circuits. We don't have an alternative for gold in tech, at least not yet. It doesn't corrode, it conducts electricity better than copper, and it reflects heat. All things that processors, medical implants and machines, and aerospace and satellite systems need to function. Gold is a necessity in tech. It's not a luxury. Now, industrial gold does influence the market, but it doesn't tighten supply. Apple, Samsung, Intel, they don't hold on to gold reserves, but they do buy it constantly. And as tech advances, needing more gold, the demand only grows. Tech giants might not keep their gold in vaults, but they do remove it from circulation forever. All right, so now we're moving higher up on the ownership ladder to the institutions that don't just invest in gold, they treat it as national security. Let's talk about central banks. Now, by this point, we're still only at 3.5 towers high here, but gold functions a little differently in this world. Central banks are like a country's financial control room, if you will. So they use gold as insurance, not income. It protects the country's currency and economy. They'll usually only sell their gold when the economy is tanking, which is what happened with Kazakhstan and the Philippines in 2024. Most of the time, it's just stored deep in vaults under national buildings, guarded by armed forces and monitored by governments. You see, gold is outside of the reach of sanctions, so it can't be frozen, hacked, or blocked. If a currency collapses or debt spirals out of control, gold is the last card they can play. In the last few years, central banks have started buying gold faster than ever. In 2022 and 2023, the most gold in over half a century was sold. Now, the United States of America owns the most gold by far. It's locked up in places like Fort Knox and the New York Federal Reserve. They've got more than twice as much as Germany, the second largest holder. Over the past few decades, other countries have been increasing their stockpile too, with Poland and Turkey leading that charge. Although experts believe that China and Russia's reserves are much higher than what they've reported. So while central banks might not be the largest holders of gold overall, they are the most strategic. Their gold is focused on control and stability, not profit. And as we climb the gold pyramid, our next tier brings us closer to everyday people. We're talking private individuals here. So almost half of all the gold that exists above ground isn't in vaults or central banks, it's actually privately owned. We're talking around 95,000 metric tons, about 9 Eiffel Towers, sitting in homes, safes, temples, and secret storage facilities around the world. Some of it is in bullion, some of them are investment-grade bars, but the largest chunk of privately owned gold is in jewelry. Not costume jewelry, not plated, but real, pure 22 to 24 karat gold, and in some countries, it's woven into the culture itself. India is the largest private holder of gold in the world. It's estimated that Indian households collectively own over 25,000 tons of gold. That's more than the reserves of the United States, Germany, and the IMF combined. In India, gold is more than just a store of value. It's a form of generational insurance, a signal of status, and a sacred object in cultural rituals. Weddings, births, and religious ceremonies are filled with gold. This is not a trend, it's a mindset. And at the top of that pyramid sits India's royal families, who hold multi-billion-dollar collections in antique gold, ceremonial pieces, and heirloom treasures that have never been publicly appraised. Their wealth isn't in bank accounts, it's in temples, vaults, and family dynasties. Then there's China, a country where the gold rush never really ended. In the past decade, Chinese citizens have doubled down on gold ownership wealth. Private Chinese investors are now buying gold as a silent hedge against inflation and against the government's tightening grip on real estate and digital assets. Gold is one of those few assets in China that offers privacy. Unlike property or stocks, there's no registry of who owns what gold, and that makes it extremely attractive for ultra-wealthy families trying to protect their assets from scrutiny. Now, you won't hear them bragging about it or anything, but behind closed doors, they're moving tons of it. In countries like India, China, Vietnam, and Turkey, gold jewelry is wealth, not decoration. A bangle isn't an accessory, it is a portable savings account. A necklace can be a financial backup plan. This is how millions of families store value, especially in economies where they can't trust banks and where inflation eats their savings. It's hard to track, hard to tax, and easy to liquidate. There's probably a home somewhere in the world with more gold than we can count. But truthfully, we don't know who owns it, where it is, or how much they have. It could be in the Chateau de Pogny in Switzerland, also known as the Rothschild Castle. They were deeply involved in gold trading and financing, and they're known to be very private and secretive with their wealth. Maybe it's at Al Safa Palace in Mecca. The Saudi royal family is renowned for their immense wealth and is believed to hold huge reserves of gold. Maybe it's even in Buckingham Palace. We'll probably never know. What we do know, and what's becoming even clearer now, is that gold will always be valuable. It's rare and it can't be made. It's not like paper money that can be printed at all. It has to be mined, refined, and extracted from deep within the earth. Only about 200,000 metric tons of gold exist above ground. It doesn't rust, corrode, or decay. A coin buried 2,000 years ago can come out of the ground looking brand new. And this makes it the perfect vessel for storing wealth across generations. Every civilization has agreed on its worth, from the pharaohs to the Aztecs, from the Romans to modern central banks. The worth of gold has been accepted across time, cultures, and continents. This makes it the only asset with zero counterplay risk. Real estate can be taxed or seized, cash can inflate away, but gold is self-contained. But there is one more entity that owns a lot of gold. And it's our bonus today, the Earth's core. Now, you made it this far, so we know that you're one of those people who want to keep on digging until you get to the bottom. Well, that's what today's bonus is all about. All of the gold in the world cannot compare to what lies deep underground in the Earth's core. Scientists estimate that the Earth's core holds millions of times more gold than we've ever mined, about 160 million Eiffel Towers worth. It would take us about 5 years to show you that on this video, so we're just gonna stop here, okay? Truthfully, we'll never get that gold. We'll never see it. The core starts about 2,900 kilometers beneath the Earth's surface. The deepest hole we have ever dug is the Kola Super Deep borehole in Russia, which is less than 0.5% of the way there. We don't have the technology to drill that far. Not to mention the temperature in the outer core is about 4,000 degrees Celsius. That's 7,200 degrees Fahrenheit. That's way hotter than the surface of the sun, okay? And the pressure would crush machines before it even got close. Even if we did manage it, experts say the value of that gold would be around 112 sextillion. That's 112 followed by 21 zeros. More than the value of all the world's assets, money, companies, real estate, even entire economies combined, many times over. The moment such a large supply is introduced into the Earth's economy, it'll tank the value of all the gold we have. So there's just no point in trying. Right now, the World Gold Council estimates there's about 57,000 metric tons of gold that we can still mine. At our current mining rate, that gives us about 20 years before we reach peak gold, the point where mining becomes too difficult, expensive, and dangerous to continue, and then demand explodes. We've got a taste of what can happen with this before 2000 to 2008. In the 90s, gold was dismissed and considered outdated in the face of booming tech stocks and low inflation. So it crashed from $850 an ounce to $250. But then the dot-com bubble burst, the dollar weakened, and the 2008 recession hit. Suddenly, the idea that markets always go up just didn't hold anymore. Gold prices went from $270 an ounce in 2000 to $1,000 an ounce by the end of 2008. At the time of producing this video, it's sitting at more than $3,000 an ounce. So now just imagine what will happen when the decline is permanent. That's why this matters now more than ever. The world's economy is moving quickly, Aluxer, and if you're not building something for yourself, you're going to be left behind. Whether you've been with us for years or this is your first Alux video, we want to help you get that momentum. We do it with knowledge and education, motivation and support, and some accountability, of course. It's all neatly packaged and curated for you within the Alux app, so if you're ready, let's go, my friend. Download the app, scan the QR code, and we'll see you in there. If you need a bit more time, that's okay. We've got a library of content that you'll love right here on YouTube. You can stay tuned for the next video or go straight to one of our current trending topics, the only 5 people you need in your company. We'll see you there. Until next time, Aluxer, take care.